Good morning. Boys on YouTube got me fired up this morning. It's been an extra interactive session on this one, asking me about chart time frames, about stuff. I got a lot to go over. First thing I want to tell you is TrendSpider, the $250 offer. If you're going to get it, act now. Act now. The offer goes until 9/30, which is just 2 days away. It's $250 a year for the first year. That's a huge, huge savings. The normal price is $780. So what do you get when you do this? You basically sign up here. When you sign up, you don't get the free 7-day trial. It's that good of an offer. They're giving you at their cost. So they pay $250 for all the operation stuff, all of the data that they pull in, blah, blah, blah. So you get that. But when you sign up through me, I also send you my algorithm. You're going to sign up here. You're going to put your credit card in. You're going to get charged. Then you're going to email me at dailystockpick3@gmail.com. And you can find me on Linktree. Let's go to the Linktree. linktr.ee/dailystockpick. And we'll go to that link tree. There you go. You can find my email address up in the upper right-hand corner. But yeah, you'll do this, email me, and then I email you back a welcome letter. Simple as that. And it includes all the links. The benefit of signing up with me is that you get to import everything into your TrendSpider. So you start trading like me. You can join me on YouTube every morning at 8:30 live and just play along. The other offer that I have is Seeking Alpha, $50 coupons. Free. This one comes with a free 7-day trial. I was asked if I were a new trader, which one would I start with? It's kind of like picking your favorite baby. I'm not a big fan at kind of choosing. They're meant for two different traders. And let me give you an idea of what you get with Seeking Alpha. First thing is you put in your portfolio. You can import it into Seeking Alpha, but here, Pre-Market Portfolio Digest. This is a daily email that you get prior to getting up. It comes in at 8:08 in the morning to me. It's great. It comes out with all the breaking news based on your actual stock portfolio and related analysis of what you want. This morning's, we talked about yesterday, I think I got the upgrade on Oxy. Rating buys. Disney, hold to buy. So if we go to Seeking Alpha, and I'm just going to go to Seeking Alpha here, and we look at Disney, it was upgraded from a hold to a buy. And the reason is valuation. Man, let's be honest. It hasn't been down this low since 2010, somewhere in that neighborhood. But it's look, it's got 3 buys. I mean, at this price and this valuation, it's 3 buys. Where's the bottom? Who knows? But I think they're going to sell some of their ABC stuff, some of their ESPN stuff. I think they're going to sell some stuff like that. I love this email because this told me, hey, it all moved from a buy. You can start buying this one at this price. Or 1 year you're down 16%, 5 years you're down 31%, 10 years you're up 22%. Are you upset at up 22%? Yeah, because SPY and other stuff is crazy good. So what do you get with Seeking Alpha? And I understand the quant rating moved Goldman Sachs from a hold to a buy. And we've been talking about this one. Remember we did the TrendSpider a few days ago. We did the TrendSpider analysis. And that's technical trading. This is fundamental trading. But the technical trading of Goldman Sachs was it was going to have a golden cross. And so, it was within 1% of the 50-day was within 1% of the 200-day. So the two together work kind of hand in hand, but that email is great. The importing your portfolio is great. The screeners are unbelievable. Their quant system, I really like their quant system. Still don't 100% understand it, but I do like it. So that's what you get with Seeking Alpha, and it's a $50 coupon if you sign up with the link down below. Now let's talk about where we are with SPY. SPY just opened up. You're up slightly. It's up 0.15. NASDAQ is down 0.2. The market's just in this kind of, Disney's up above 80 again. But the late rally, what took the market down in the morning was the assumption that the 10-year goes to 5%. The 10-year now is 4.6, 4.7, somewhere in that neighborhood. But if we go to 5% and it holds at 5%, that's not a good thing for stocks because people can get 5%. So there's a couple of things that happened in the afternoon with the rally that happened in the afternoon. If we look at SPY, on a 5, it doesn't look like the afternoon did anything. But if you take a look at the 5-minute yesterday on SPY, and we just take a look at what happened with SPY, look at that. In the morning, right here, you kind of went, this is September 27th right here. Look at that kind of trough. And then you came right back to kind of where you opened up. Now today, it's a little bit, you're in no man's land. We really don't know where it's going. Is there a catalyst? Was the jobs number good enough? Blah, blah, blah. So you got to pick your battles on this one. I particularly yesterday, just so everyone's aware, I put it up on Savvy Trader. I bought Uber. I bought a small lot of Uber again. You can see if you go to Savvy Trader, you can see how much I bought. But I bought Uber. I think it was at 45 something. I got 45.37 or something. So I'm down on what it was. I bought a little bit of a high. I was trading on a 5-minute. I just kind of chased it. I needed to go somewhere. I figured, 5 years from now when the stock's at 80, 90, whatever, I'm fine. See, the MACD's about to cross over. We're about to get back into Uber from the algorithm. The algorithm doesn't really work on this one. This is a long-term hold for me. I'm dollar cost averaging in this one. They hired a new CFO that came out after the bell last night. Needham reiterates buy on Uber technology. They maintain a $60 price target. Needham analyst Bernie Mac reiterates Uber Technologies with a buy and maintains $60 price target. You can go over here to FinViz and we can type in Uber. And we can look at some of the fundamentals. The forward PE is 45. They are not making money. You want to be in this stock when they actually start making money. The issue that you have right now is that you've got a double top right there at about 48, which it has to work through. You also are up 82% year to date. BTG reiterated with a price target of 60. The average price target, 58. So you're trading at 40 something now. And 58 is the price target now. I like this stock. I'm adding to it. So that's a good one. Let's look at there's the Seeking Alpha offer. Apple. I will put this in the newsletter. Apple, a big bearish rejection. Technical analysis. This article goes over the support and resistance for Apple, the rejection for Apple. This goes over all of the chart stuff that I try and say, and I, be perfectly honest with you, I probably ignore based on Apple. In our view, the stock hasn't made a new swing low before making this second swing high to break through and ultimately fail. It's likely that in the coming weeks and months, the stock will try to find a demand at a new level. The 125 level is a solid candidate for this target, as it's where the stock bounced in early January. That said, it's unlikely that Apple bulls will let the stock get this cheap, barring some disaster with the Vision Pro or another important product. Although there are signs of this happening with the most recent iOS launch and overheating devices. Most likely, the stock continues to chop around for a while until it builds strength, again running at new highs. We're looking at the level of 143, which may see a fresh bid as the stock continues to break down on smaller time frames. Take a look at Apple. Let's go look at the charts on TrendSpider. I talk about this all the time, and 168. I mean, are you getting it under 170? I don't think that it's a bad thing to start adding. The problem that you have with Apple is it still doesn't have confirmation. Your RSI is at 32. Do we know where the low is on this one? No. But as Apple goes, the market goes. This one's down another 1%. Now, if we take a look at this, let's go over to Seeking Alpha. You know what? We'll go to Seeking Alpha and we'll look at Apple. Because what I want to do is chart this one with year to date, where we are versus some of the other great eights that have really run up. Because Apple has not pulled back the same amount. We'll look at Amazon. We'll look at, let's see, NVIDIA is a good one to look at. We'll look at Netflix. We'll look at Meta. And we'll look at Google. I'm not going to put Tesla in here just because I don't think that that's the right portion to put in. We'll take out the S&P and we'll put in SPY. We'll put in SPY at the end. Okay. We'll update this chart. Let's take a look at this because there you have NVIDIA at 243%. 243%. You know what? Let's just get rid of NVIDIA. That's an AI trend. We'll just get rid of it out of this chart. Let's look at the others. You've got Meta at 121%. That's probably similar to Apple. They're competing with the Vision Pro. They made an announcement yesterday. 1 year, you're up 121%. Let's look at year to date because Apple has not performed as well as Meta year to date. Meta was beaten down. Google is up 46% year to date. SPY is only up 11%. Amazon is up 46%. Apple has not participated as much as the others. Now, in the short term, we go down to 6 months. You can see Apple is up 7%. Everything is up even more. We go down to 1 month. And we look, Apple is down 6%. Amazon down 6%. Netflix down 9%. Meta is up 2%. Google just kind of flat, hanging out. SPY is down 3%. Let's look at the 5-day. Apple is down 3.5. Amazon 4.61. Apple doesn't have a lawsuit against it. Netflix is down 3%. Meta is up almost 1. Google is kind of flat, 0.3. SPY is down almost 1%. So take a look at that. Apple, in my mind, is just kind of middle of the pack. Apple is the largest stock that's held by the stock market. I like it. I still think it's not going down. I would buy it in the 160s. I said this before. If we take this back and we kind of look, let's look at last year, because last year I think is a perfect example of where we saw Apple and where we might be going, because this is the exact chart that I see from last year. Let's see. This is the 4 hour, so we've got to pull it back a little bit. Look at Apple last year. Let's go to, you know what? We'll go to a weekly. Let's go to a weekly. Maybe that will, I think it's similar to last year, but we're going to have to pull this back a little bit to see this year and last year. So last year, here you go. January 2022. You're up here, 168, kind of fluttered around this entire way down from 160 down to 130, which was June. And then you shot up in August. And then you came down. Here's the December lows. And that's where we went. And you continued up. Where are you pulling back to? Are you pulling back to the 50-day at 161? Maybe that's the next support as far as a weekly moving average goes. That 50-day right there. Are you pulling back to the 200-day at 140? Maybe, potentially. Listen. I think that you do have more downside to go. So at 160, I'm probably pulling the trigger if I'm wanting to build a position in Apple. That's where I'm going. I'm probably pulling the trigger on this. Am I going all in? Say I've got $10,000 in cash. Am I buying $10,000 of Apple today at 168 if I want to buy it all? No. I may go $1,000 at 168. It doesn't have confirmation. If I want to build a position, I'm going to dollar cost my way in. 160 in my mind is a good time to do that. Now, I say that, and then you've got a company that has declining revenues, declining margins over the years. They haven't been able to grow the iPhone significantly. They haven't come out with anything like earth-shattering. The news about the Vision Pro is great, but are people going to go out and spend $3,000, $5,000 on a headset? Probably not. The forward PE is 25. Remember, the average for the S&P is somewhere between 17 and 18. This company isn't growing like others. It's not growing like Meta. It's not growing like Google. It's not growing like Amazon. So you've got to understand that there might be some limitations in that multiple coming back down. So it's up 31% this year. Not a horrible thing. Average price target, 181. You're trading at 160. The latest one outperformed 240. I mean, it's 181. But look, the lowest one is Barclays from August at 167. That's where you're trading now. This dude's going to have to come out with some type of revision. These 205s and stuff like that, are they taking it down? No. I mean, this is essentially where the market's going to go. Apple is going to guide it. I don't think that you're going down to the 140s. My guess is you may have an opportunity to buy this in the 150s. I think, we talked about, I showed X last night, CNBC closing bell, had a poll. How low will Apple go? Not below 165, 34%. 150 to 165, 32%. Below 150, 33%. That's 1,000 votes. There's nothing telling there. Absolutely nothing telling. So I'd be a little bit careful, but I would, start loading up. Again, if you want that, start loading up. Let's go winner chicken dinner of the week. IONQ. It was up yesterday. It was up big yesterday. Let's take a look at the 4 hours, see if it has it. We're bouncing off that 200-day. So if you want it at 1457, I don't think it's a horrible price to get it off that 200-day. That 200-day was $13.31. Your 9-day is moving forward. You've got confirmation above that 9-day. Your MACD is crossing up. Your RSI is still down. It's not a horrible time to buy it. If we take a look at this one on the 65-minute, because this one has a major volatility, 1431 is the price point. It's at 1457 right now. You haven't crossed above your 200-day. You had that death cross right there. This is a 65-minute. The reason the 65-minute works, in a trading day, there are 7 candles, 7 perfect candles in a 65-minute candle. So it's a good one. It's a good one. Now, let's go over to Investopedia. Damon asked me about other indicators. Hold on one second. What's going on? I heard a dog. I don't know. I have a dog that has seizures sometimes, and I heard some rolling around. I wanted to check on the dog. D-Man asked me about other indicators that I use. He's seen me use stochastics. He's seen me use Bollinger Bands. He's seen me use everything. If you want, my guidance to him was, hey, go over to Investopedia. Investopedia should be bookmarked on everybody's web list. But look up most used indicators. Let's just do that one. We'll look at it. Most commonly used periods in creating moving average lines. You can look at that. 7 technical indicators to build a trading toolkit. I mean, that's a great article. I can tell you just from the thing. On balance, accumulation distribution, average directional index, Aaron oscillator, moving the MACD, RSI, stochastics. Just Google that. I mean, honest to God, I am not an expert, but my guidance to Damon was make sure that you're an expert on the moving on the indicators that you use. For instance, I use the MACD. The MACD is what my algorithm is on. I know the MACD. I know the MACD on Apple. I know for a fact on the 4 hour that Apple with the MACD, you can absolutely trade on the MACD with Apple. Now, the reason why I say slowly add in, the MACD is below the strike line and it's moving down. The RSI is moving down. Become an expert at your stocks with the indicators that you use. Amazon, great for instance here. Would I add to Amazon right now? I think Amazon's not done going down. Look at the MACD. The MACD is just, the MACD actually is super, super low on this. Would I add to it here at 120? I probably would. The reason is because I don't think that the MACD ever stays down here for very long. So you've got to understand your indicators. Don't overthink things. And because you see somebody else using an indicator, for a particular stock, don't overthink it. Just become an expert. I've got the RSI, I've got the MACD, I've got my moving averages, I've got the Bollinger Bands up here, I've got the volume distribution. Become an expert. But get Apple, I'd say get Apple under 170. I've said get Amazon under 130. I've said get Google under 130. We talked about Goldman Sachs. Finally, we can look at Goldman Sachs because we talked about this one, having that golden cross on that strategy that I used, which was finding stocks within their 50 days within 1% of the 200 day. And we talked about this potentially having a golden cross. It hasn't crossed up, but it damn well looks like it's going to. So, and you've got this gap up here at 340 and it's trading at 320. Peloton yesterday, they did a deal with Lululemon. This one, I want to look at the 5-minute on this one. They did it was up 30%. It was up 30% yesterday. You're at 525. Let's look at the after hours on this because I want to look at a 5-minute and the after hours. It just immediately, what they announced was that Lulu will stop selling the mirror and Peloton will become the exclusive brand for Lulu Exercise. And all Peloton clothing will be Lululemon now. You can see the hype rally is real. The volume is way up. You can see it opened up at 510. It dropped down to 480. It's going through volatility. It's at 516 right now. You have confirmation on the 5-minute. I just think it's any reaction in the market is an overreaction. Your RSI is at 88. Am I trading in this one? No, because they didn't announce anything other than Lulu and them are going into a deal. So, yeah, the late day bounce on this one was nuts. Meta, there's a new strategy from TrendSpider for Meta. Let me look at where it is. There it is. This is Meta, 30 RSI BB breakdown on volume. I will include this in the newsletter. It has a 359% strategy performance. Buy and hold performance is minus 16%. That's a huge difference. Percentage of winning trades, 25%. Like I said, you don't win the majority of time, but you protect your losses. Risk to reward, 6.62. Average position return, 0.93. Drawdown is 12%. Take a look. If you have TrendSpider, if you haven't gotten TrendSpider, remember I said there's an offer out there for $250. So take a look at that one. The Apple Car. I will include this in the newsletter. We just talked about Apple. Apple Car, which is expected to be a huge bump to the stock. It's supposed to be lost. The development of the Apple Car seems to have lost all visibility at the moment if Apple doesn't adopt an acquisition strategy to enter the auto market. I doubt the Apple Car will go into mass production within the next few years. They were expected to go into production, I think in 2025 somewhere. So, yeah. GameStop, GME. For all you degenerates out there who still want to trade GameStop, it's way up today. And the reason it's up is Ryan Cohen was named as the CEO. And how this happens, I have no idea. What kind of board is in place that lets somebody who's under SEC investigation? If you don't remember, Ryan Cohen bought Bed Bath & Beyond, announced that he bought a bunch of shares in Bed Bath & Beyond on Twitter. And immediately when it was up like 30, 40%, dude sells within like hours. He sold. So, hold on one second. The banging that I heard is from outside. Hey, get. No. Sorry. So yeah, there's here. The other thing, yeah, GameStop. Is it down again? It opened up at 1802. It is at 1770. Yeah, it's down. I mean, it closed yesterday at 1716, so it was way up, pumped it up. Now it's down. Great article to understand. We're going to close this one. We're going to close this one. We're going to close this one. Great article to understand. S&P is headed below 3,000. Basic math and a metric beloved by famous economist Robert Shiller suggested. This article, read it. It's a 5-minute read. It's not much. May not make sense to you. Use Investopedia. Go through this article. Understand why the multiples say that the S&P might go down to 3,000. Don't let it scare you. But understand that this is part of the reason why we're going down. This article just outlines it perfectly. You're going to have to read it. and I'll put it in the newsletter. Do you have $3,000 right now? Well, here's 3 stocks: Palantir, Enphase, and ASML. So the ASML is a chip maker. They make the equipment that makes the chips. Taiwan Semi and Intel just told them to hold off on deliveries of some. The assumption is that we're slowing down on chip manufacturing, blah, blah, blah. Enphase, solar. I mean, I've gone over Sedge on this podcast many times. I hold Sedge. Palantir, I still hold. I think this is a $25 stock. Be in it when they announce that they are making money. Palantir is a good one. So we'll close that one. Now, Pioneer Natural Resources, gushing cash, selling put options is optimal. I want you to read this article as well. I will put it in the newsletter. One of the reasons why I want you to read it, understand the charts and understand why this guy says, hey, he's got a strategy. He goes over the outlet. He goes over the valuation. He goes over the trade. He says, as a result, we like the December 15th, $215 strike puts. He goes over the risks. It's a 78% probability of worthlessness by option expiry. They seem like a great win-win play. You're collecting the premium, essentially. So he goes over the summary. What I want you to read as well are the comments. Everybody is commenting, you're out of your mind. We've got room to run. Why are you selling puts? Because you don't benefit in the upside. You just collect the premium. So understand that there's headlines out there on every stock telling you to buy and sell. This is where, Seeking Alpha comes in. Analyst rating on this publication, buy. So he's saying buy it, but then he's saying, selling put options. So I don't know. By the way, you got the dividend wrong on that one. So I want you to read that one as well. Now, social requests. We'll go back to I don't want to go there. We'll go back to TrendSpider here. Hey, Gary, could you do a review of these 2 growth stocks, please? ABR and UEC. Let's look at ABR. I don't know what they are. This is from Bruno, who says, good afternoon. Started trading a month ago. That's the next one. This is from Matilda on Instagram, ABR and UEC. Let's look at ABR. ABR, you're kind of using that 200-day as your support level right now. Your MACD kind of crossing up. Your RSI is at 39. It's in the upward direction. Not a horrible place to be. The stock chart looks good. Let's go over and check FinViz for ABR. The Arbor Realty Trust. Ooh, is this a REIT? It is a REIT. Careful with REITs right now. Everything REIT is should be careful. They are making $311 million, so they have a PE of 8. The dividend is 11%. If you listen long enough, Matilda, you understand I don't like REITs because they tend to pay out huge dividends, and they're great if you're living off of the money that you get on the dividend. But because they pay it out, they don't reinvest it. So you're up 13% year to date, which is great on a REIT. Average target price is 16. For this one, I would not worry about the average price target. I would worry more about the dividend at 11%. The most recent 2 things are downgrades. They Piper Sandler downgraded it from overweight to underweight, 16 with a price target. JP Morgan, neutral to underweight with a $13.50. June 23, Wedbush outperformed with $15. So it is recently covered. I'd be a little bit nervous about it. You can go over some of these things. Let's go down and see if there's anything. June 1st, looks like the director bought $112,000 worth. Not any huge money. I mean, again, if you're talking hundreds of thousands of dollars on a market cap of $2 billion, it's not a huge dollar amount. If I saw a couple $1 million being bought, I'd say, hey, we're going back up to this 18. Right now, you're in this downtrend, but you're in a downtrend for REITs. I don't love it. I don't hate it. I think it depends on what you're trying to get in there. If you're trying to trade this one, I think there's better trades. But if you're trying to just hold on to a REIT, earn 11% while, real estate kind of goes back, I don't think that's a horrible strategy. I'd just be a little bit careful. And again, remember, I'm a tech investor. I do not know the makeup of that REIT. I do not know the fundamentals. I do not know the management of that REIT. That is for you to decide. Now, UEC, uranium. Uranium has been on a crazy, crazy run. We talked about the MACD. MACD crossed down here. My algorithm keeps you in because it does have some moving averages in there. You got a gap down here between 264 and 271. That is not your resistance. Your first level of resistance is actually that 50-day at $4.84. This one has run from $3.33 in the algorithm July 19th. All uranium has run like this. Let's go in UEC. There has been a uranium run in the stock market. And if you look up any uranium stock, it's been running. This is another $2 billion company, small cap. PE is 756. So it's expensive at $5.52. Understand, it's expensive. Year to date, you're up 42%. Let's see, average price target is 698. You're at 552. Your 52-week high is 555. So you're at 52-week highs. The most recent initiated TD Securities, speculative buy, they put it in at $6. Everything is speculative on this. So your upside is maybe 10% is what these guys are saying. Most recent buys were way back here in March. They bought at $2.66. These guys are super happy. These guys exercised options at $1.50. The director sold $160,000 worth at $3.21. I bet they were upset because they've almost doubled their money now. If they would have, whoever bought that, I don't think it's a horrible play. I just think it's extended. Matilda, I would probably stay out of this one. There is no dividend. You are really looking for capital appreciation, and I think you've got it. Doesn't mean that you may not go to 12 because uranium has been on that kind of run of recent. So thanks for the question. She wrote me on Instagram, and I missed it for the last couple of days, so maybe I lost your money on UEC. Bruno, good afternoon. He wrote to me on Spotify. Good afternoon. Started trading for a month now. I enjoy your channel ever so much. Thank you for putting this together every day. I was wondering, with ABR and TTZ, what's your opinion? ABR. Let's look at ABR. If I can type. ABR is Arbor Trust Realty, another REIT. The stock chart is similar. I just went over ABR. So ABR is the same one, Bruno, that Matilda asked me about. So I'll leave it to that. I don't think it's a horrible play. I'm not a REIT guy. I'd rather have a tech stock that would run up than play the dividend. But TTZ, I don't see TTZ. I see TTZ 23 cotton futures, but I don't see a stock TTZ. So I can't look that one up. TTZ. Yeah, there's nothing in FinViz. So write to me again. Write to me on email. Write to me on anything so I can respond to you. But TTZ, I don't see a symbol. Let me see. Maybe it's TZZ. No. TZ. I don't see anything. No, I don't see anything. So Bruno, write to me again. I'll take a look at that one. Let's see. Now we're going to go over the scans. And the scans are large. I mean, yesterday, again, the afternoon rally made a lot of MACD cross-ups, and the algorithm picked them up. One that I would tell you to buy, and I've been saying this for a while, is Devon. I had a price to buy Devon yesterday, I think at $48.60. Didn't go through. It just failed out. I'll add to it today. Try and add to it. Oxy had a cross-up. If we go and look at Oxy in the core portfolio, Oxy here is at Oxy 65.61. You're trading at 65.94. Not a horrible play. I like it. Exxon had a cross up. We're at 52-week highs, by the way, all-time highs on Exxon. So it's a little bit extended. D-Man wanted to know when I decide to sell stuff. Well, look at Exxon. If we go over here to Exxon, a chart shows you everything that you need to know on Exxon. Exxon has run an enormous amount. Oh, come on, FinViz. Move for me already. Exxon, your PE is 9. Your forward PE is 13. 3% dividend yield. You've got this top right here. Your 52-week range is 85 to 120. You're at 120. You're trading at 119.94. Want to know when I'm going to trim? I'm going to trim this one. This is one that I'm going to take profits on because I was screaming to buy this one at 102 down here. I said later in the fourth quarter, you're going to see oil up. Well, Exxon was one of those that I said buy to buy down here. Did I get nervous when it hit 111 and then it pulled back to 106? Nah. I mean, this is a long-term buy. This is one that you want to own for a while. Oil is just going to continue to go up. We talk about supply and demand all the time with oil. OPEC and those guys are just pulling back production. So Exxon, Chevron, same thing. But Exxon has the cross up. I think Chevron had a cross up earlier this week. PXD, we just went over that Seeking Alpha page. Yeah, PXD, I'd buy it. I mean, at 233, I think this is a $250 stock. Honest to God, I think this is a $250 stock. So I like PXD here. NVIDIA had a cross up. And these are all in the core portfolio, by the way, these top ones. NVIDIA had a cross up. It is at 417. So buy at 417. It's at 428 today. I talked about it yesterday. It's using that 200-day as support. I don't think this is a horrible one. I think it's expensive. Absolutely expensive. I sold this at 505. I'm going to buy back in. I'll probably buy back in today at 420 something. I think that's a good risk reward right there. Am I selling my my lot in Netflix? No, I'm going to add to this one. 377 cross up right there. So those are the core portfolio: Devon, Oxy, Exxon, PXD, Pioneer Natural, NVIDIA, and Netflix. That's in the core portfolio. Those are not coming out of the core portfolio. I'm going to do a core portfolio update. Hopefully by October 1st. I'm using Seeking Alpha to try and look at all the core portfolios. And we've talked about Coke and things of that sort where they're probably coming out, but those 5 aren't coming out. You're good buying those. ELF. We talked about, I bought Ulta. ELF. ELF. This one has seen a pullback, 109. You're under the 200-day with a growth stock like this. I think you're fine. They're going to continue to grow. Yes, it's a consumer discretionary product. Yes, you are under the 9-day on the weekly. You are not touching this 50-day. You are under the 21. The 21-day is just turning fine. I think you're fine at 112. Buying it. The cross up was at 109. Palantir has a cross up. We talked about this one with that article. If you had $3,000, which one would you buy? Well, Palantir at 1486, you're at 1531. You're using that 200-day. You've gone through it already. That 50-day is going to bounce off that 200-day. While you're in this descending wedge, you're breaking out above it. Yes, the RSI at 58 is a little bit extended, but your MACD is down below the oscillator. I think you're fine. Long term, I think this is a $25 stock, so I think you're okay. We talked about Netflix. Upstart has a cross up. And the only reason I'm putting this one in there is because this one has been a good one to trade. It makes you a lot of money when it starts to go up. But honestly, this one is a little bit dangerous just because this is the one that I believe it's AI for loans. So it's been, again, higher for longer. That's a dangerous one. Rivian ain't going anywhere. Rivian's delivering. Crazy how good those Amazon vans are. MKBHD did a look at Rivian Amazon van. Crazy how customized they are doing it. Ford can't do that kind of thing. So I like Rivian. I think Rivian trucks, it's the best SUV out there, electric SUV. I think they've got a good product. They've got good backing, and I think they'll make a go of it. Just understand it is expensive. Let's just go over to FinViz, and for shits and giggles, we're going to go Rivian right here. They are not making money. They are losing $5.9 billion. They have plenty of cash, though. There's no problem with cash. They are not going to dilute. That's not what you have to worry about. Your price to sales is 7.32. So let's look at Tesla, for instance. Your price to sales, 8.2. But they are making money, and they got plenty of cash. So which one do you buy, Tesla or Rivian? I'd probably say buy Tesla just because I think that one is in the S&P 500. It's got a little bit more pump to it. Rivian probably, it's trading at about the same as Tesla, just a little bit lower. but you're not going to see 100% gain in either one of these. They're super expensive. The PE on Tesla is 68. The forward PE is 51. As margins get reduced from Tesla, other automakers will be forced to reduce their prices and therefore reduce their margins. Therefore, a company like Rivian that has to put in a ton to just build up their production capacity, that's going to get hurt by it. So I'd rather, I think Rivian is a $30 stock at some point this year. I do. But is the market going to say that? Higher for longer kind of, just puts a nail in that coffin. Not meaning that the company is going to go dead, just that, Dexcom. I have this note in here. The 50-day is starting to turn positive. I think anything close to 100 is a good price here. You're at 92. Today you're up, 2%? You're at 94. The danger of this one is if Apple makes any move towards punctureless blood sugar test results, that's what's brought this one down. I still say this one's solid. It's a solid play. I think that 200-day, right now the 50-day, you have to make it through there. That's at 98. If you want to take the chance at 94, I think 98 is your positive. If you basically want to put a stop loss in, I'd say 92 is your stop loss. Make your stop loss because you're still moving negative on the 50-day. I would have a tight stop loss on that one. Other ones, Illumina, Gilead, ADP, Marvell, which just reported Intuitive Surgical. There's a whole bunch of energy names, and I'm going to go over a couple of, but XLE did cross up. Now, this is the spider sector. XLE did cross up, and it's been a buy. It's been a buy, honestly, since 88. Got you out with a 1% gain. You're back in at 92. Do you want to buy here? Let's take a look at the 52-week because honestly, it's a little bit extended, but the price of oil continues to go up. You're 2% below your 52-week high of 94.71, and that was just set a couple of days ago. So you can see right there, the double top from back in February when prices were still high. I think you've still got room to run. It's a supply and demand issue. But XLE 92.14, you're trading at 92.41 if you don't want to take the some of the others. Now, if you want another ETF to buy into, VanEck Oil Services ETF, OIH, 357.74. Again, you're running into 52-week highs. But as oil prices go higher, this is the oil services sector. They will make more money. So the MACD's just crossing up. The RSI is in a comfortable range, a little bit high at 58, but I don't think it's bad. FANG, which is Diamondback, great dividend. Venom or Viper, VNOM, great dividend again. Arch, which is coal, great dividend. Boyle, we talked about natural gas. Natural gas kind of saw one go down. I saw yesterday final trade with Farmer Jim Liebenthal on CNBC, who I really, really like and I really, really respect. He chose LNG as the thing. Boyle, this is the natural gas futures. Now, if you wanted to actually invest in natural gas, LNG is where you trade. LNG is a little bit extended, but understand that LNG or Cheniere Energy, these are the guys who are going to supply Europe with cheap natural gas from the U.S. What they do is they load up in Louisiana and Texas. They load up ships, and then they ship it over to Europe, and they sell it for like 15 times what they actually extracted it for. So as a cold winter, it hits Europe, and Putin reduces the amount of gas that he gives them. Yeah. If you wanted to do services in the oil business, Schlumberger just had a cross up. SLB, Schlumberger. I never know how to say this, but I think it is Schlumberger. $60.81. You're butting up against 52-week highs again. But that's the entire energy sector. BTU, which is another coal, Peabody, I think. ConocoPhillips, COP. That's another one. I will put all of those in the newsletter. And if you want to sign up for the newsletter, that's at dailystockpick.substack.com. If you want any of the links, you've got TrendSpider, 25% off there. You've got your $50 coupon. right there at Seeking Alpha. All of this can be found at Linktree, linktr.ee/daily stock pick. Join Webull. You get free stocks. If you don't have a charting program on your desktop, throw $20 into Webull. You'll get free stocks even with a $20 deposit. They'll throw you some free stuff. It's not going to be a ton, but they'll throw you some free stocks. But you get access to their free desktop software. I like their desktop software. It's Mac specific, which is why I don't like Fidelity's Active Trader Pro. But I do like this one. Daily Stock Pick newsletter. If you're paying anything more than $25 for your phone service, visible right here. You get $20 off your first month with this link, and the plans are super cheap. I personally have the $25 a month plan. I use it. I love it. You get everything that you pretty much need. The only thing that I don't have, I do get 5G and 4G LTE. I don't get the 5G ultra wideband premium network experience. You do get, I think it's 50 gigs of services here. It's only $10 more. It's $35. So you use this promo. But again, premium data. So it's just like Verizon. So if you have a phone and you don't like what you're paying, get that one. If you're thinking of buying a Tesla, use this. You get $500 off in 3 months of full self-driving. Savvy Trader. I talked about Savvy Trader and understanding that I bought Uber yesterday. What this does, it's a free service. And if you are not logging, if you are new to trading and you are not basically journaling your trades, you're just kind of losing it. I mean, again, you have to understand why you buy things, why you sell things, understand the system, get it in place. This one allows you to actually use real-time market data, and you can paper trade. This isn't linked to a brokerage account. So say you buy Uber, you wanted to buy Uber yesterday. Well, just put in that you buy Uber. You don't have to spend any money, and it's a free service. They provide this 100% for free. In fact, I even asked their AI. They are linked up with ChatGPT. And I asked the Savvy Trader AI, I said, rate this trade. And it said, rate my trades. It says, the investor strategy appears to involve dollar cost averaging and taking advantage of earnings opportunities. Absolutely. They mentioned buying before earnings multiple times, indicating a focus on potential price movements around earnings reports. Absolutely. They also mentioned specific price targets or ranges for some purchases, suggesting a disciplined approach to entry points. Absolutely. The investor shows a preference for certain stocks, including NVIDIA and TQQQ. Absolutely. They mention owning long-term or using specific strategies for those stocks. Yep. They also mentioned considering valuation and confirmation signals when making purchases. Overall, the investor seems to have a methodical approach, combining long-term holds with short-term trades based on earnings and technical analysis. Absolutely, 100%. So if you're interested in that, Savvy Trader, the link is right there on Daily Stock Pick. If you've made money off a trade, I just asked for a tip. You got my personal Venmo, PayPal, Cash App, whatever you want. But I am here every day live on YouTube at about 8:30 in the morning. So, or you can catch me on Spotify. If you want to listen on Spotify, it's right there. Apple Podcasts is right there. I'm on Twitch. I'm on YouTube. There's my Instagram and my X, formerly known as Twitter. We've got a private Facebook group that you can join. And if you want to email me, because you don't have social media, there's the email address. So anything else you have, just hit me up with a question. I'm going to read the comments on YouTube right now. You guys have a great day. Take care.